So the last time I showed you guys a trade that I took, I'm not sure if it was on Euro US dollar, it was a GBUSD or something else, but it was basically a loss, right? I'm going to do a separate video on that as well, just because it wasn't a full R loss at the end, because the price managed to reverse back to my entry target. But considering the swap fees I had, it was still a negative trade. Anyways, today we are on the GBUSD 1 hour chart. I took this trade on Monday, 3rd of August, and today is Monday, the 10th of August. So it's been a full week since this trade's been running. It's almost like a swing trade. It's not extremely long term. As you can see, the price is now closing into my 1 to 2 take profit target. If I zoom out just a little bit, the main issue with trading for me right now is that there is no real trend going on here, right? We have a lot of consolidation. We have, well, there are tiny small trends within, this consolidation, but the price has mainly just been moving sideways. And in sideways markets, I usually perform the worst. Well, that's at least what my data says, right? So this was a very, very welcome change to my recent portfolio, as this year Forex has just not been the greatest. I mean, yeah, sure, I'm up, considering this now, I'm up 10%, which is pretty good, but I've been able to climb to that 10% with a lot of swings, right? So as soon as I get up, I immediately get down. I mean, so just as soon as my equity curve was up, basically the entire year, I entered a losing streak. And then again, and then again, and then again, and then even further down, and then kind of slowly climbing back up. It's been a drag this entire year, basically fighting to kind of stay afloat. But 10% is 10%. It's actually, we're gonna see, we still have about 3.5 months left till the end of the year. We're gonna see where this goes. I've been doing better in the stock market lately because of the bull run, but actively, I'm mostly trading Forex. I do have a couple of trades on some main tickers on the stock market. I'll make a separate video on that probably soon as well. But right now, let's just talk about this thing in particular. Again, price. Basically, what I try to and do is I identify trends, right? And in this particular time, like I said, the trend is more or less sideways, right? So you have to be a little bit creative when identifying the situation and what's going on. Basically, price been going down, and then a sudden change in direction, breaking structure to the upside, another correction to the downside, breaking these lows. Then again, price starts pushing to the upside. I see a nice area of technical demand, or whatever you guys want to call it. Some would say it's an order block. Some would try and identify fair value gaps or whatever somewhere. This is basically an incredibly simple, system. I look for areas of supply or demand, and I simply put either an order, or I just wait for the price to come to the area and see if there's a reaction, if there's a dive deep into the zone there, maybe I could get a potentially better entry. Of course, my stops are set so the trade has some room to breathe, because this could easily, push further down before turning over. And even if it wants to turn over and starts climbing back up again, this is trading, this is probability, this is outcome. I risked 1 unit, I'm targeting 2 units, and that's it. So the way I have this, the way I have my capital kind of proportioned out is I have multiple trading accounts. Some of this money that I'm talking about is on a funded account, so basically not even money some of it is it's private funding, my own. And that's basically it. I'm risking 1R for me would be about $3,000 at this point. I'm not going to talk about percentage because I don't want to. And this trade is going to be a 2R winner. Hopefully, it's very near to that. I actually closed it out already on private capital because my entry on private and my entry on funded were just a tiny little bit different. And my entry was a tiny bit different because before I managed to switch the trading accounts from funded to private, the price dropped a little bit further down. So I was able to get a much better, not a much better entry, but a little bit better entry on my private capital. So the price was, when the price was here at about 1 to 1.7 on funded, it was actually much closer to 1 to 2. It was basically almost I think it was almost a full 1 to 2 on private, something like that. Well, so basically it made no sense for me to keep, that position open. But on the funded account that I have, this is still only a 1 to 1.04 now. Oh my God, this is dropping. Doesn't matter. We're gonna wait it out. We're gonna stick it out. The stops are now at break even, just because it's not only a probability thing, but it's also a safety thing, right? I mean, it's not that I don't believe, my data doesn't support me putting stops at break even when the trade hits 1R in profit or anything like that. But when the price is almost at your take profit level, for me personally, it just doesn't make sense to leave the full R on the table. That's why we close out the risk. That's how we minimize risk, of course, and that's how you stay in the game for long term. So check your data, see what your data says about your trading decisions. This is not me, deciding this on the spot. That's just how it goes, right? When my trade is almost at the take profit level, it doesn't make sense to leave full risk on the table. It just doesn't, right? Because at that point, essentially, I'm not risking the full R that was from my entry to my stop loss, but I'm now risking almost 2R in floating. So if if the price hits the stop loss from this point down, I would actually lose 3R. So not only would I lose $3,000 risk, I would risk another 3,000 from the 1R that was already hit, existing. So that's almost 6,000. So that's 6,000 now, and the 0.66R as well floating extra. That would mean altogether I'd be risking almost $9,000 on this trade, and that doesn't make sense. Risking 9,000 or 8 point what something. You don't want to risk $8,000 to make $1,000, right? That's just not how trading works, and that's why it's good to be safe. Trading for the long term, trading for the long run. That's what we're all about. If you don't like it, too bad. It means you're not a good trader, sadly. But not everyone can be.